Hello. Thank you for joining our Q3 2023 update. I'm Tony Marino, President and Chief Executive Officer of Tenaz Energy. Please note our advisory on forward-looking statements. Let's start the day with a review of our operating and financial results, beginning with Q3 2023. During the third quarter, we closed the acquisition of XTO Netherlands. This transaction nearly doubled our presence in the upstream and midstream sectors of the Dutch North Sea. We had record production of 2,372 BOED in Q3. This was 25% higher than in Q2, and it included a 46% weighting of European gas in the product mix. FFO was $4.8 million, an increase of 44% from Q2. We recorded net income of $20.9 million. This was driven by a gain on the XTO acquisition. At the end of the third quarter, we had adjusted net working capital of $44.9 million. The increase over Q2 was driven by the cash that we acquired as a result of the XTO transaction. It also included the effect of deploying capital in Canada for our development program. That Canadian development program was a 4 gross well, 3.35 net well drilling campaign. It's been very successful. I'll discuss it in more detail in a minute. The wells are currently averaging about 230 BOE per day. In that mix, 87% oil. And for the field as a whole, production from Leduc-Woodbend has averaged about 2,000 BOED for the first 6 weeks of Q4 2023. After the end of the quarter, we hedged about 40% of our Q1 24 TTF gas exposure at a price of 55.75 euros per megawatt hour. At current exchange rates, that would correspond to about Canadian dollar price of about $24.12 per MCF. Looking at the first 9 months of 2023, we averaged about 2,200 BOED. That was 97% higher than the first 9 months of 2022. We had FFO of $15.5 million in the first 9 months. That 180% higher than the first 9 months of 22. Net income for the first 9 months was $23 million compared to $4.5 million in the same period for 2022. And our NCIB program retired a total of 1.53 million shares to date, about 5.4% of our basic share float. Average cost per share of that buyback about $2.41 per share. And for 2023 year to date, Tenaz places in the top 1% of TSX listed issuers in terms of total return, with a total return of 109% year to date. Let's focus in for a minute on our Leduc-Woodbend development program. As I mentioned earlier, we conducted DSET, or drilling, completion, equipping, and tie-in operations on our 4 gross well, 3.35 net well program for 2023. Finished that activity in Q3 and brought all the wells on production at mid-September. These wells were spread out into diverse parts of the Leduc-Woodbend field, 2 wells in the north, 1 well in the middle, 1 well in the southern part of the field. The average horizontal length on this drilling program was 2.3 miles. That is the longest drilling program that we've conducted to date in the field. It was very successful in terms of placing these longer laterals within the producing zone. We had 100% placement of the laterals within the wreck sand. It was also quite successful in fracking these longer wells. We placed 97% of the fracks that we attempted in this 4-well drilling program. Gross production rate from the new wells has been strong. All 4 wells successful. The average rate is currently about 230 BOED per well, 87% oil in that product mix, and the wells are continuing to clean up, increasing production rates as they recover their completion fluids. For the field as a whole, we've been averaging about 2,000 BOED during the first 6 weeks of the fourth quarter, or roughly half of Q4, compared to the production rate that we had in Q3 of 1,275 BOED. So a successful development program at Leduc Woodbend. We're happy to announce that we have appointed Verinia Radu as an independent director of Tenaz. Verinia is an experienced international lawyer and business leader in the European industry. She is partner and deputy head for energy and climate change in Central and Eastern Europe for the international law firm CMS. Very strong educational background, degrees in law, international relations, petroleum management. Verinia has an MBA from the University of Chicago and a diploma in board practice and directorship from the Henley Business School in the UK. We're delighted to have Verinia on the board. She's going to add great expertise in legal and regulatory matters, in M&A, and in EU energy and ESG policy. So a continued strengthening of the Tenaz team with the addition of Verinia Radu to our board of directors. Let me speak briefly about our 2023 outlook. We're going to continue production in the Leduc Woodbend field in Alberta. That includes the 4 new wells that I talked about earlier. We're going to continue our disciplined M&A program that targets opportunities in our main regions of focus, first of all Europe, and secondarily MENA and Latin America, with some optionality for Canada. With respect to production and capital guidance, there are no changes. This is shown on the lower right of this slide. We updated our production guidance at the time of the XTO acquisition. The guidance is a range of 2,300 to 2,500 BOED for the year as a whole. Our E&D CapEx was not changed at the time that we announced the XTO acquisition. Range of $20 to $24 million for development and drilling activities. No changes to that guidance. We would expect probably to be about in the middle of that range. And we have executed our 4-well program in Canada already. On the lower left of this slide, we show a pie chart detailing our production mix. About 40% of our production comes from Canadian oil and NGLs, another 24% from Canadian AECO gas, and the remaining 38% now with the XTO acquisition coming from high-priced European TTF gas. And I would also mention that for Q1 2024, we have now hedged about 40% of that TTF exposure at strong prices. Let me finish today by briefly discussing Tenaz Record since we effected the recapitalization transaction about 2 years ago. First of all, production has increased up about threefold since the recapitalization. Cash flow up even more dramatically, about an 8-fold increase since then due to an improvement in margins and in production. And at the same time, we've had these increases in production and cash flow. We've been able to improve the balance sheet position of the company. Currently, $45 million of negative net debt. And while all of these 3 things have been accomplished, our NCIB program has also reduced our share count by about 5%. We've been pleased to see the market performance this year. On a year-to-date basis, we've had a very strong total return, actually ranks us within the top 1% of the roughly 1,800 TSX listed issues, and has led to an improvement in our market cap as represented here, and an increase in enterprise value as well. And finally, on this slide, we point out that the Tenaz directors and management are investors along with the rest of our shareholder group. The D&O currently hold about 9% of the basic shares and 22% of the fully diluted shares. Finally, I'd ask you to note our closing disclaimer. I will thank you again for your interest in Tenaz. I thank all of our shareholders for their support of the company, and we look forward to meeting with you again when we release our Q4 23 and full year 23 results.